Hi everybody, and welcome back to Weekly Real Estate Tips with Torie. I am Torie Ellens, and this week I want to talk about the summer market. So after a slight pause, if briefly at that, we are definitely back in the full swing of things, and our summer market is hot, hot, hot. Quite literally hotter than the temperatures we're experiencing. And as you guys know, here in the Phoenix area, that can be miserable in the summer. But I want to talk about why it's still a great time to buy and why it's still an amazing time to sell. So currently, for the month of May, we were just told that 1.95 months supply of inventory is our number. Again, as you guys have heard me say, we like to see 3 months supply of inventory. So we're still only at 1.95 supply. That's very short, but for buyers, interest rates are still at historic lows. The biggest thing though is when you hear historic lows on the rates, what does that mean to you? If you're a buyer and you're buying a $350,000 house, what does that mean to your payment, and what could a rate potentially save you, both by the year and maybe over a period of 5 years? So let's talk about that $350,000 price point. Today, it's pretty common that you'll see 3% as an interest rate. The payment at 3% on $350,000 would be $1,791 a month. Again, there are some variables, but this is using the same baseline for insurance and taxes. So $1,791. Now, I think we would all agree that 4.5% as an interest rate is still incredible. But if you look at a payment at $350,000 at 4.5%, the payment goes to $2,059. That's $268 you're saving. If you break that out over a period of 5 years, that's $16,080 that you could be saving yourselves simply by buying at the rates that we are at today versus where rates could potentially go in the near future. Now, again, that's for you buyers. For you sellers, we are seeing that currently in the month of June, 23% of properties have sold above list price, and we're only midway through the month. So I imagine those numbers will continue to tick upwards. We are seeing a lot of properties selling not only above list price, but with multiple offers, so sellers are still able to kind of write their own ticket and pick the buyer that best fits what they're looking for. When we talk about the projected home appreciation, if looking at the National Association of Realtors projections for the year of 2020, they're projecting a 3.8% increase. For the year of 2021, they're projecting 2.1%. So when we talk about what's going to happen in the future, if you look at projections all across the board, those percentages vary, but they all are showing increase in that appreciation. So when somebody asks, should I wait to buy because the market's going to crash? Look at the data. You can't go wrong if you research the data, and we're happy to provide that for you. The data will help you make that answer, and it will also help you make an educated decision on what's best for you. We're happy to go over all of this individually with your situations, run some numbers for you, put you in touch with lenders who could see what you qualify for. You can follow us on all of our social platforms. And also, if you'd like to reach us directly, we're at 602-288-8881. Until next week, again, this is Torie with the Ellens team, and I look forward to talking with you next time. Have an amazing week.